Hello everyone, my name is Marcello Colax and today we are going to have a look at European energy markets for the week starting the 7th of August 2023. You might have seen on LinkedIn already that I am hosting a free webinar for next week, next Tuesday. It is all fully booked out. I have 100 confirmed signups, so unfortunately we are fully booked now. And in my very first free webinar out of a webinar series I'm going to do, we're going to talk about technical trading in a fundamental market, because it is one of the most common questions I get. And yeah, I'm just here to help all of you to see what technical analysis has to offer and if it is also the right thing for you to do in the first place. Okay, cool. Let's jump right into it. Let's have a look at the TTF front month. On the weekly chart. So we can see, zooming out, that we are still very much in a mid to long-term downtrend, so nothing has changed here. I'm telling you the same thing every week, that we are still within this descending channel. We are below the 200-week exponential moving average, so all is going exactly to plan. So let's have a look how far we have retraced already. So I am taking this entire preceding up leg going back to May 2020. Some of you might wish to just put it here, March 2021. I'm just putting it here to get the full move into it. And as you can see, we have been retracing lower and we are nearly at the 61.8% FIB retracement, which is just above 20. So I still had my eye on 20 as a target for quite some time. So if eventually, we'll talk about that in a second, if we were to break lower, then on the midterm basis, it would be very easy to move to 9.05. I find this very unreasonable for now. This is not on the table. For now, we have to resolve this range here. Once again, I am not saying we're going down here. I'm just saying the likelihood of going to 9 euros per megawatt hour is more likely if we actually, with confidence, break below 20. This is not happening now, so it's not really relevant. Okay, cool. So let's put on some tools. So we can see that, yes, we're on the DMI. I'm using the ADX, the average directional index, and we can see that we have moved to 16. So what the ADX is doing, it is telling us whether or not the market is trending, and if we are below 20, then the market is not trending and is rather in a sideways range. And this is exactly what is happening right now, right? So if we zoom in, especially onto the daily chart, we can see that, yeah, we do have a triangle that has been squeezing price into an increasingly tighter range. It all started in early June. I believe it happened with Norwegian maintenance that pushed price higher. And since then, we have been swinging lower within this triangle. So what does it mean? Well, from a fundamental or psychological perspective, it simply means that supply and demand are in equilibrium. So that simply means that the market does not perceive any imbalance in the supply and demand picture, which is usually something that's desirable for, well, humankind, but probably not also exciting for traders. I feel that we have now moved into a stage where it almost doesn't even make sense anymore to trade on an hourly or 15-minute time frame, because the swings have become so small that risk for losses is much greater than anything that could be gained potentially. So the risk reward doesn't really make sense anymore. If you find a good setup intraday, make sure you're going into the very small time frames so you can actually make use of it. So don't trade on the daily chart and then just go from like one candle to another. Really zoom in. I believe that we would be resolving to the upside or to the downside if we either push above 34.35 or below 24. So what is my directional clue? I don't know. but I can tell you when I would know, right? Past these boundaries. The triangle itself would help. So if we start breaking above the triangle, then chances are higher to move to 34, to at least test it, right? If we move below the triangle, chances of actually going to 24 are higher. I do run a Technic Analysis WhatsApp group where every week I do ask 250 participants where they think the market will go, and the majority right now is still bearish. I also had a LinkedIn survey earlier last week, and most participants were thinking that this triangle will ultimately resolve downwards. I'm not there. I'm not as convinced because I really just want to see what's happening. Okay, cool. Let's have a look at the tools. How do tools help us? So in a sideways trend, I encourage you to not look at tools that are based on moving averages. I do say that every week because it will just, we have the MACD here and will just generate like too many false signals. Yeah, so let's take this one on here, for example, yeah, MACD. So we do get a bullish signal here at this point in time. Would you have taken that? Probably not. And we do get a bearish signal here, which is silly. And then we do have smaller signals that some people like to take. I like to avoid these MACD and signal line crossovers. I really want to see a trend change when we cross above or below this zero line. So I don't even take the smaller signals. But can you imagine you would have taken all the signals, right? You would have gone bearish here. No, sorry, bullish here, bearish here. Even more bearish here as we bottom out, so you wouldn't have taken that, of course. Then we go bullish here, a little bit of a flip-flop here, and so do not use any tools based on moving averages, which is why you can't see me use it right now. Instead, what I like to do is I switch to oscillators, in this case the stochastic. Of course, some people do enjoy the RSI. There's nothing wrong with either of them. Now we have progressed so far into this triangle that even those are not useful anymore. So here, in order to make use of the swings, which you probably can't do anyway anymore, I would just use them on the 15-minute chart. But we're on a daily chart right now. Okay, how do I know that we're in a sideways trend? So when do I know that I shouldn't use moving averages anymore? Well, that's the tool that I just showed you. It's a DMI, the Directional Movement Index, and part of it is the ADX, Average Directional Index, and it shows us below 20. Whoop, there you go. Below 20 we are not trending, above 20 we are trending. So right now this has picked up a little bit. We are at 21, but still I don't see it happening for now, right now at least. This tool would show us that right now the bulls are a little bit more in charge, and that's simply because we started making a higher trough, but we haven't made a higher peak yet, so it doesn't really make sense anymore. So first of all, the first thing I do is I do look at the ADX. Are we below 20, or is it declining drastically? Then if yes, then probably we start moving into an increasingly tighter range, so probably not looking at those tools anymore. Let's assume, so now this is all based on hindsight anyway. Now we know, right? But when would we have known? Well, let's see. Lower lows, lower highs. Okay, downtrend still intact. We have a little bit of an up leg, and oh, look at this. All the way until here, we actually started pushing towards this high from early April. So are we still forming lower lows and lower highs? Well, not really anymore. I would be really careful. Then we do move lower again, and we do see that we have a little bit of a base forming here. So not only are we not making lower lows anymore, we're also not making, not only are we not making lower highs anymore, we're also not making lower lows. So this low, and then ooh, a higher low. So at this point in time, probably I would have gone, I did go neutral. So what did the ADX say at this point in time? So here the market was really with it, with this up leg, with this down leg, I mean, and we can see that bearish enthusiasm kind of like peaked here, which is true, and then we gradually declined, and I would have started worrying here. So the 20 is not a line in the sand, it's more of a guideline, right? and then we did see that, oh, at least at this point in time, we're not even having an uptrend right now. So we do have higher lows, but we're not having higher highs, not even that. So probably a sideways trend. And yes, it develops, and we have this sideways trend. So I did spend a lot of time on the TTF now. Of course, exactly the same thing applies to the NBP. I hope you did enjoy this. I sometimes like to explain one concept in a little bit more detail so that every week you learn something a little bit, something else. Okay, let's have a look at Brent. Very happy with how Brent is developing. So fairly early on, I was bullish, and we did see that we have this old resistance level that is now offering support. The 200-day EMA, which was resistant previously, is now offering support for the second time. So I think chances are good for us going into this strong resistance area, but then ultimately possibly pushing higher. This is the first time in a long time that we actually have a chance at making a new high. So you can see, zooming out, we haven't really pushed above this level since, well, November, December 2022. Zooming out onto the weekly chart, we do see that the range has been dominating the market for quite some time. We are passing past the 200-week exponential moving average, up and down, up and down. So once again, in a sideways trend on any time frame, you wouldn't want to use moving averages, right? So what is happening here? Let's have a quick look. Okay, so the first thing I see, strong resistance. The second thing I see here is, oh, this is a hanging man, potentially a bearish reversal candle. So this here would imply some losses. How valid is this pattern? So now in this case, we actually can look at the MACD because we have a little bit of movement here. We're not quite there yet, but a little bit. Okay, so overall, the MACD is moving higher, and we are about to get a bullish signal. But here, once again, do not forecast the forecasting tools. It's only bullish once we have a bullish signal. Yeah, but we do have this bullish divergence. So the market is still moving sideways, while we do see the MACD pulling higher. That is one piece of evidence for ultimately breaking above this. So let's have a look. What is stochastic doing? Well, we are in overbought territory. This is nothing to worry about. This simply means that we started to make new higher, that we started to close above a preceding range, because that's all that the stochastic and all the oscillators are actually calculating. So if we break above a range, as we did here, of course, automatically, any overbought, oversold territory indicator would immediately show you that the market is overbought. And that's simply by the way they're calculated. So here's the thing. As markets break above a range, do not pay attention to stochastics or any oscillators, really. Start looking at volume and momentum tools to see if the market is really going for it. So let's have a look at volume. Volume is strong, so there is some firepower behind it. And ultimately, we did not get a bearish signal yet. Yeah, so moving into overbought territory is not the signal. Moving out of it would be the bearish signal. Not happening yet. This here looks good. Strong volume. We have a few successive candles. This here could be tested this week. I wouldn't be too surprised if you actually try to break higher here. So that's the second thing you learned today. So as we are within a range, do look at oscillators. As we start breaking above a range, do not look at oscillators. Can you see the interplay between momentum tools and oscillators? So when to use what? And that is something you rarely find in textbooks. That's something you get with experience or with a coach or a guide or someone who helps you. Let's have a look at the last market. We are looking at carbon, European carbon emission certificates. So let's take all of this out and let's only have a look at the weekly chart. So nothing has changed here. We are still in a long-term uptrend that goes back to 2017. Nothing special here, all going according to plan. We are above the 200-week exponential moving average, so long term we are still up. What about the medium term? Well, in the medium term, I would see that we are still within this descending channel. And ultimately, looking at a few tools, let's put in the MACD again, just for ease. We do see that overall, let's get me here, we start seeing that the MACD is like making lower lows and lower. So overall, we're like swinging lower and lower and lower. And we did this as we hit 100 as a good resistance level. And once again, what's this called? Divergence. So the market isn't moving anywhere, but we do see that the MACD is ultimately moving lower. So the market is more likely ultimately to move lower. So where are we right now? We haven't really gotten a bearish signal yet. We are just above the zero line, but overall we are still heading overall lower. Let's have a look at the stochastic. I'm not entirely sure if we get a lot of signals here. Yeah, so here we can see that the market is moving lower even before we reach overbought territory. So the idea is still bearish. Let's have a look at the MACD. Let's have a look at the daily time frame. So this is the channel that I just marked out, yeah. And every week, so I left on the old support and resistance levels. So we did push above this and above this resistance, which was the preceding like a little bit of a range here, and we pushed right through it. So is this still valid? Is anyone really trading here? Did anyone put their stops here? No, so we can delete that. So which one is the most important resistance level right now? No, wait, let's look at support first. We did push below this support level, which held once, twice, very nicely, and then a third time we went through. So here we can truly say this is support turning into resistance, because you remember Brent, when you moved above the range and then resistance turned into support. Here we see the other way around, where support, former support, is broken and then turns into resistance. So overall, the market did something like this, and that means overall we are more likely to move like this. And this is confirmed by the MACD moving fairly straightly below the zero line. We did get a bearish signal. I mean, I'm only updating this once a week, yeah. But we did earlier last week. Remember, we did get a bearish signal here at this point, so this was very, very good. So I'm sure a lot of you would have gotten this, probably would have gotten out here. That would have made a lot of sense, yeah, considering we also had the 200-day exponential moving average as a support level. So if you got this entire leg until here, that's good. Now if you want to go short again, yeah, even more, some people might look at this. This is not trading advice, by the way. So I leave this on, but not as support. Now I'm leaving it on as resistance. There you go. Next thing. This here still is the best support level. It's this trough from, what is this, 5th of June. So I do call this still, this is the first support level that we are about to hit. It doesn't seem unreasonable, nothing crazy here, and tools more or less align. Once again, moving into an extreme level on the oscillators, overbought here, oversold here. Moving into it is not the signal. Moving out of it would be the signal, yeah? So as here, moving into it wasn't the signal. The signal is when we move out of it. So right now, would you go to your colleague and say, oh, we are oversold, so the market isn't going to move lower? No. Because as you can see here, we can stay in overbought or oversold territory for extended periods, yeah, probably for longer than anyone could stay in a trade. So really go for when we are not in this extreme territory anymore. All right, okay, so this was it. In summary, we do have the TTF and MBP still working through this increasingly tighter range, this triangle. I do not dare to make a recommendation, but the market seems to think that it's ultimately going lower. So here's a question: should I be a contrarian or should I go with the flow? We do see that Brent has pushed above its sideways range, and now for the first time in a long time we do have a chance to break above whatever this here is, the 88 range, to fully move into a mid-term uptrend again, and then we do have carbon, where we are still in this medium-term downtrend that is very likely to continue, provided the R1 is holding. So if we move all the way up until here, then I'm less certain about this down leg here. Yeah, so this here truly needs to hold for us to then ultimately push lower to, I would say 80 seems still very reasonable. Thank you very much. That was everything for the week starting 7th of August 2023. Find me on LinkedIn. My name is Marcello Colax, and I'm always happy to help out. If you or your team want to talk about TA, just let me know. Okay, cool. Everyone have a good week and see you around. Bye-bye.